Hello guys, welcome to the Trading Parrot. As you can see, the ceiling has become thinner. We could do that Quantic jump into 70k and continue the liquidation, but in today's video I'm gonna tell you why I'm expecting a little bit of a slowdown in here. I'm gonna use arguments coming from liquidation pools. I'm gonna talk about the CME gap. We'll review in detail the past performance of previous Septembers, taking in consideration what top traders are doing, what the global traders are doing, because they get everything wrong, and this is not the exception. So stick with me and let's break it down together. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And guys, I don't know how to describe my appreciation. A couple of days ago, I was asking for 100 likes. Just a few days after, I asked for 150, and we made it. And this whole weekend, it's been mind-blowing. What the hell is going on? Maybe retail is back, or maybe I'm doing better videos. You tell me. We went from 200 to 300, and yesterday we made 400 likes. So I hope the answer to that is that retail is back together with I'm doing better videos. Let's get into the content. Let's have a very quick look at the forecast that I prepared early in September. Looking at all these boxes that you can see in here that represent the first half, it's September, and the second half of the box is October. And when we look at 2020, which is the equivalent year based on the halving events, you can tell that from August you usually have a drop into September, then somewhere in the middle, let's say 15th to 20th of September, you find some sort of local peak, and then you have a depression that typically recovers into October. That's kind of the pattern that we were looking, September being typically a bearish month, but we were accumulating quite a lot of liquidity at the top that will be just too juicy for the market maker to not take. So we established that the probabilities of going upwards were higher than going downwards, but we still left some dry powder in case we were to collapse to 46 to 48k. That, together with our three entries we did at 59, 57, 53.5, which were published on Twitter, an entry of 46 to 48 will have been the fourth entry in case we had a bearish September. But we decided to just ride the way up, and our plan was, if we had this depression by the end of September and it doesn't reach sub 50s, we do not buy more, we just continue to ride up. Let's have a quick look at other Septembers. For example, in here you also have the last day of August. This pattern is a little bit more messy. You drop into September, but you do it a little bit late on the second week. Then you have this rally into the middle of September that still is the same, and then at the end of September you have a final flash that leads into a rally in October, November, in December, going into the bear market here in 2022. August again, drop down into September, rally into the middle of September, and then a final flash at the end of September, entering into October. And notice that this is bear market and you still have a rally from 19k to 22k. A very humble rally, because here you end up having the FTX collapse. But going back into bull market in here in 23, August dumps into September, rally at the middle of the month, final flash end of September, and then you start your rally October, November, December. So where are we with this observation of the past performance? Have we already had the final flash of October, or should we be expecting in the final 2 days to have some sort of drawdown? If we look at August, you can see that we respected part of the pattern because we went down. These lines were drawn at the end of August, so we did go lower in the beginning of September, so that you can say check. Then we have a rally in here 13th of September, and that rally did a drawdown of 5% barely. Can we consider that the final flash of the last bit of September, and maybe this an early rally into October? Potentially. What I'm gonna show you in the rest of the video is some signs of a slowdown that we are perceiving. That slowdown might play out potentially as a deeper correction, and if you watch my video from yesterday, you should know My opinion that however low we go with the remaining bit of September, I do not care, of course, as long as it's not a black swan event or something really big happening geopolitical globally. But if that is not the case, a healthy correction here I wouldn't really mind, because that's kind of expected with the last bit of October. To be honest, we are a bit late to have that. If you notice in here, we have already made a higher high relative to the highs of the last days of August, which is really rare. We already appreciate that this performance of September is the best September in Bitcoin history. If we were to close today, we still have 2 more days to go. So we didn't do the second half. This was the forecast pretty much getting into 17th of September with the rate cuts, topping out somewhere there, having some sort of sell the news just to match the past performance in all Septembers in the past, which we are currently kind of deviating from it. So whether we're gonna have that small correction in here somewhere to the low 60s or we have it in early October is very difficult to tell, but what I'm gonna show you in the rest of the videos are signs that we are currently screaming for putting a low. We have so far put this high, this low, and then we have this strong leg to the upside, so we are overdue now for having some sort of low. If the low was to be printed in the very early days of October, that will be also a new thing, because typically in October we tend to just go up. Either we do it slowly like this line in here, or we do it in an explosive way. And if you notice, this angle that I put in here based on past performance is currently matching what we have already had from 18th of September. So could we say that our 18th of September has been shifted 2 weeks earlier and this was the drawdown of September? Potentially yes, but still, let's review those aspects that could slow down the pace, maybe for a few extra days or maybe for a couple of weeks. Fair value gaps. We have produced quite a lot of fair value gaps from the low 60s up until 65k. So there is an incentive for price to go and grab those levels. If you look at the past 30 days, all the way going to the low 60s, that will take roughly 6 billion in liquidations. Immediately above the price, we have a very thin leftover of liquidation pools. For the price to continue feasting from these liquidation pools, it needs to make a quantitative jump into almost 69. If we were able to do that on our weekly close due to some sort of miracle of volume right before the end of the week, which is typically what we were experiencing in the early stages of the market, where I remember all the way around here, typically on a Sunday, right before the close, they were starting to buy like mental, hitting all the liquidations from the shorts, and that was the typical show to watch on a Sunday night. We haven't had one of those in quite a while, but even though I'm mentioning these slowdown aspects, that doesn't necessarily cancel out 100% the chances that we could do that on a Sunday and hit the 70k and leave loads of people behind thinking, wait a minute, were we not at 53k a couple of weeks ago? What the hell are we doing above 70k breaking out? No one told me about this. You can even see how the experts all over the place are calling out for, number one, lack of retail participation from Korea and the US premium, range-bound market with high open interest. This is one interpretation that I appreciate about the open interest, but if you watch my video from yesterday and probably the past 3 days, I keep repeating myself that we are at the top range of the open interest with 21 billion, getting very close to that 21 billion mark, which has been the top for the past 6 months. And I speculate humbly that this time might be different. Watch my video yesterday to see why. Short-term price increase driven by derivatives, stagnant spot volume, and the list of things to be bearish from half of the traders, including professional ones, are piling up. But I'm gonna show you something that is going on the order book that has me thinking that some of those bears in the next upcoming days draw dropping when they finally see what could be unleashed this particular pattern that I'm gonna show you. You have this whole rally in here that is currently screaming to put a low. Sure, the open interest has been jumping on top of this trend line and it broke down below, retest as resistance. So within this range, we have managed to get to the top at 65k, and we are already at an open interest of 84k, which compared to 82k roughly around here means that we have almost reset the open interest around the same open interest that we have in this area, which is almost the low. At that point we have lows of shorts, just like we did in every single bounce. Every low typically calls for all the shorts to think, oh, this is my chance to short the price. And then these moves that are more impulsive are those shorts screaming and hitting the desktop thinking, damn it, again I got liquidated. Those liquidations are visible if we increase the size of these bubbles. Shorts getting liquidated, then longs getting liquidated, and eventually we get to this top and we once again have those shorts entering, but right now the amount of positions open have reduced almost to this level. And my point is that in this particular scenario where we already have those shorts, we have very little number of positions open, we could speculate that if the price dropped in here to put that low, we will increase even further the amount of shorts, the open interest will spike for those shorts, and that will put them back into risk, and that could create the energy to make that new impulsive move back again to higher highs. But this time from an even lower level of the open interest relative to all this channel in here. I hope that makes sense. Another pattern that we are seeing, this one is actually bullish, is to see the global longs reducing in September into October. That was the pattern that we saw in September in 2023. As you can see in here, we are seeing the same. Price going higher, global longs going lower. And just like we forecasted, we left this line at the beginning of September saying the global longs are gonna come down. In that sense, we have been accurate. This is matching the price going up, global longs going down. Bearishness from the vast majority. What I'm seeing different relative to the previous September is that at this point in time, at the last leg of September, we were seeing loads and loads of negative funding rates. That means loads of shorts. In this case, in here, we have seen that the shorts stop messing around and getting liquidated with shorts up until mid-September. With the rate cuts, they kind of step back, and now you can see that the open interests are going higher. As a result of that, top traders have taken those longs. You can see in here, top traders took longs, whereas global longs have been going down. And then once again at 64k, the top traders have taken the lead, taking a long right there. You can see how top accounts in here are taking longs and shorts. There's a mixed bag in here, but eventually from roughly mid-October, they just go nuts in terms of longs. Pretty much they're all over the place, while at the same time the funding rates are negative, which means that global longs are really not taking advantage of the pump. And why do I care about top traders versus global longs? Because global longs do the wrong thing, top traders do the right thing. Always? Not necessarily. But if you ask me, should we be paying attention to both? Yes, we should. Because top traders tend to get the best trades when the global longs are doing the wrong thing and they are the ones getting liquidated. And at this point in time, they have taken two longs and global longs are coming down, which is a good thing. How are we with the order book today? Well, we finally got over this almost 80 million of resistance at 65k, and we currently have a more humble 45 million sitting roughly at 67k, though that is the last resistance that we have to make it to 70k. Once we make it to 70k, as I explained earlier, that's when the real party unleashes. We go back into this red that ignites a similar short squeeze like we can see in here. Getting to 69 is already in red, but you can compare by the colors in here how the liquidity increases the higher we go. Once you get to 77k, we run out of those liquidation pools tools and we start what is called price discovery. And that, guys, is the dream of pretty much everyone on Bitcoin at the moment. If you focus on the total liquidity that is shown at the top of this chart is called trading different. You can find in the description a discount. I also made a video explaining how to use it with a tutorial. Search for trading different. One of the top results on YouTube is going to be my video explaining. As I say, focus on the total. We got 27k at the top, and as we start going higher, we get to 70k. Now we start having buckets of 50k. That now is 60k, 64k, 74, 88, 100k. But if you notice, each of these small rectangles can be up to 100k. So if you put that all in context in here and you use other tools, you can tell that there are billions at stake. We're talking about tens of billions in liquidations if the price manages to get there, because pretty much everyone has been so bearish, particularly when we went to 53k. And luckily for the longs, the shorter people feel, the more they put at stake here, then other people notice and they take advantage of that. And we're talking about the whales. Speaking of them, we have a small good news in here. We are now at 0.74, which is a lower low relative to that. You know the drill. The more withdrawals we see in here from big whales, well, that's pretty much what we want to continue seeing. Each of these stops they were distributing. Now we are at a higher high on the daily, above 65k, breaking the structure. And these guys are not stupid. They are accumulating. This time they decided that after monetary policies, it's enough to distribute on retail at those tops. This time, instead, they're doing the opposite. Notice that in today's video, I haven't put much emphasis on the 4-hour and 1-day time frame because not much has changed since yesterday. I strongly recommend you to watch my video from yesterday. It's got a lot more insights about that. I went through each scenario. I'm just gonna update you that on the 4-hour, I have moved our support into here. So that means that we have roughly until RSI 52 on the 4-hour as support. I think that we're gonna lose that one. And once again, if you watch my video from yesterday, you know that on CME we close at 66.2, which is awesome. That gives us a lot of headroom for the price to go lower, even to 60k. Always thinking that we have that sort of insurance, which is the price eventually having to maintain that 99% of the time closing those gaps, as you can see in the left hand side of the chart. So if we were to dump on the weekend to these prices, great, because we can come back to 66 or somewhere there to close the gap. On the daily time frame, yesterday I gave you this level of RSI 65, which is represented by this line. I told you that is the daily support. Yesterday we held it, we bounced off it. Today we are in a candle in red and we are threatening once again to break it. I told you yesterday that I do not trust that we are gonna hold that support. We'll see if we get that miracle and we do the Quantic jump into 70k and we continue liquidating the rest up until 77k the next week in the beginning of October, or if we are due for this retest once again at 64.7 or even lower. I still think that we do need to put a low. This is already quite a long leg from low to high, so thinking that this is just gonna go in this direction, I doubt it, because in this vacuum in here there is not enough liquidity to behave like a short squeeze. Whereas if we get to 69 and above 70s, sure, there is a lot of headroom and a lot of liquidity to do that impulsive move, but not right here. And crossing fingers, I am wrong. Guys, if you open the description of this video below, you're gonna find plenty of very useful links, starting with my Bybit airdrop of $500. You can also claim 30,000 in rewards and get a free account on TTP. If you open an account with my referral link, that will definitely support the channel, so thanks so much for that. If you're curious about the tools I use in these videos, I have partnered with all my favorite tools so far. You can get very big discounts, as you can see in the description of this video. Many people asking me about trading different, where you can see the liquidation pools. If you want to use a hardware wallet from next generation, very convenient, just carry a card in your wallet that is Tangent. We have discounts for all of them. TradingView discounts, material indicators to see fire charts, and a lot more. See you in the next one. Bye bye.